What if I told you that silver could be heading toward $92 and almost nobody is truly prepared for it? For 10 straight months, silver has closed in the green. Not one or two lucky spikes, but a steady, powerful climb. And now the latest PPI data has just confirmed something bigger, a breakout that could change the entire precious metals market. If you care about protecting your money, growing your wealth, or simply understanding what is happening behind the scenes, stay with me. And before we go deeper, take a second to like this video and subscribe to Safe Haven Wealth. It helps this channel reach more people who want real financial awareness, not hype, not fear, just smart preparation for what's coming. Let's slow this down and really understand what's happening. 10 consecutive green months is not normal behavior for silver. Historically, silver is volatile. It spikes fast, drops fast, and shakes out weak hands. But this time feels different. This has been a controlled climb, higher lows, strong monthly closes, increasing institutional interest, and now the Producer Price Index, or PPI, is showing that inflation pressures at the wholesale level are not cooling the way many expected. When producers pay more, eventually consumers pay more. That inflation inflation is sticky. And when inflation sticks around, hard assets start to shine. Silver has always been a dual asset. It is both money and an industrial metal. That combination makes it extremely sensitive to global shifts. On one side, investors buy silver when they lose confidence in fiat currency. On the other side, industries need silver for solar panels, electric vehicles, electronics, and advanced technology. As the world pushes toward green energy and digital expansion, silver demand continues to grow. Supply, however, has not kept up at the same pace. Mining output has been relatively flat. New discoveries are rare. Production costs are rising. When rising demand meets limited supply, price pressure builds quietly until it suddenly explodes. Now, let's connect this to the breakout. Technical analysts have been watching a long-term resistance zone for years. Every time silver approached this level in the past, it faced heavy selling pressure. But this time, the market did not reject the price. It consolidated, it built strength, it absorbed sellers. That is how real breakouts form, not from panic buying, but from steady accumulation. The recent PPI numbers added fuel because they reminded investors that inflation is not defeated. Central banks may talk about stability, but the data tells a more complex story. If inflation remains above target and interest rates eventually start to decline, that creates a powerful setup. Lower rates reduce the opportunity cost of holding precious metals. At the same time, persistent inflation increases the need for protection. That combination has historically been explosive for silver, and this is where the $92 projection enters the conversation. It is not a random number. It is based on prior inflation-adjusted highs, monetary expansion trends, and historical silver-to-gold ratios. When silver moves, it often moves much faster than gold. Percentage gains can surprise even experienced investors. But let's stay calm and realistic. Markets do not move in straight lines forever. Even in strong bull markets, there are pullbacks. There are shakeouts designed to test conviction. That is why emotional investing usually fails. The smart approach is understanding the macro picture. Governments around the world continue to operate with high debt levels. Currency purchasing power has steadily declined over decades. People feel it at the grocery store, at the gas station, in rent payments. Silver and other hard assets are not about getting rich overnight. They are about maintaining purchasing power over time. At Safe Haven Wealth, the focus has always been protection first, growth second. When you view silver through that lens, the recent 10 green months become more than a chart pattern. They become a signal of shifting confidence. Investors are quietly preparing. Central banks are diversifying reserves. Retail interest is slowly building again. And mainstream media is still relatively quiet. Historically, the biggest gains often happen before headlines become loud. Think back to previous commodity cycles. The early stages feel boring. Prices grind higher while most people ignore them. Then momentum builds. Then headlines appear. Then late buyers rush in. The question is not whether silver will have volatility. It always does. The question is whether the long-term structure has changed. And right now, the structure looks stronger than it has in many years. Another factor many overlook is the silver-to-gold ratio. When this ratio stretches too far, it often snaps back. Silver has historically outperformed gold in the later stages of precious metal bull markets. If gold continues holding strength and pushing higher, silver could accelerate even faster. That is why analysts are now discussing targets that once sounded extreme. $92 is not a prediction carved in stone. It is a possibility based on historical precedent combined with current macro conditions. Let's also talk about investor psychology. After years of sideways movement, many people gave up on silver. They moved into tech stocks, crypto, or other trending assets. But markets move in cycles. Capital rotates. When confidence in risk assets weakens, money looks for stability. The recent PPI data reminds us that inflation risk is not gone. And if economic growth slows while prices remain elevated, that creates uncertainty. Uncertainty drives hedging behavior. Silver benefits from that behavior. At the same time, industrial demand adds a unique flaw under the market. Solar energy expansion alone requires significant silver usage, but electric vehicles require more silver than traditional cars. As global infrastructure modernizes, silver becomes embedded in future technology. That is not speculation, that is physical demand. When investment demand returns on top of strong industrial demand, the supply-demand imbalance becomes more visible. Now, I want you to imagine something practical. If silver were to move aggressively toward $92 over the next cycle, how would that change your strategy? Would you regret not paying attention earlier? Or would you feel prepared because you understood the signals before the crowd? This is why education matters. Not hype, Not fear, just awareness and patience. We also have to consider currency dynamics. The strength or weakness of the US dollar plays a major role. If the dollar faces pressure due to fiscal deficits or monetary policy shifts, precious metals often respond positively. The global financial system is interconnected. Debt levels are historically high. Servicing that debt becomes harder as rates stay elevated. Eventually, policy decisions have consequences. Silver sits quietly in the background, waiting for those consequences to surface. And here is something important. Even if silver pulls back short term, the larger breakout structure can remain intact. Strong markets often retest breakout levels before moving higher. That is normal behavior. The key difference between a fake breakout and a real one is follow-through over time. 10 green months already show unusual strength. If the next few months maintain higher lows, confidence will likely grow. As we move closer to the end of this discussion, I want to hear from you. Do you believe silver can realistically reach $92 in this cycle? Or do you think this breakout will fade? Share your thoughts in the comments because your perspective matters and it helps others see different angles. And if you found this analysis helpful, share this video with someone who cares about protecting their financial future. The goal of Safe Haven Wealth is simple. Stay calm, stay informed, stay prepared. Silver's recent performance is not about excitement. It is about signals. Inflation pressures confirmed by PPI, strong technical structure, growing industrial demand, shifting investor psychology. These pieces together form a bigger picture. Whether silver explodes tomorrow or continues climbing steadily, the foundation looks stronger than it has in years. Remember, wealth protection is a long game. Markets reward patience more than emotion. Keep watching the data. Keep learning it, and most importantly, keep thinking independently. Because in times of uncertainty, preparation becomes your greatest asset.